Hey everyone, welcome back to Corporate Decoder, the place where we crack open financial filings and find the real story, and sometimes that story is about a company right on the edge. Today, we're diving into a filing from Pluri Inc, and let's just say things are a bit tense. They've received a notice from the NASDAQ stock market that has us all taking a look. Pluri Inc, trading under the symbol PLUR on the NASDAQ capital market, has gotten a rather important notice about its listing status. Now, usually when a company gets a notice from the stock exchange, it's not exactly a congratulatory letter. And in this case, this filing is all about a notice Pluri received on the 20th of January of 2026 from NASDAQ. The big headline here is that Pluri is not meeting a key requirement to stay listed on the NASDAQ capital market. Specifically, NASDAQ has a rule that companies need to have at least $35 million in what they call market value of listed securities, or MVLs for short. Think of MVLs as the total value of all the company's shares that are currently being traded on the stock market. If this number dips too low for too long, the exchange can delist the company. And unfortunately for Pluri, their MVLs has fallen below this $35 million benchmark. NASDAQ also offers some backup plans like having a certain amount of stockholders' equity or making a good chunk of profit. But the filing tells us Pluri isn't meeting those alternative standards either. This isn't an immediate crisis though. The good news is that this notice doesn't mean their stock is going to be pulled from trading tomorrow. The shares will continue to trade on the NASDAQ capital market under their familiar symbol PLUR. Pluri has been given a breathing room period of 180 days, which is about 6 months to get back into compliance. That means by the 20th of July of 2026, they need to show NASDAQ that their market value of listed securities has been $35 million or higher for at least 10 consecutive business days. If they can pull this off, NASDAQ will acknowledge they've met the requirement and the issue will be closed. However, if they don't make it, NASDAQ will likely move forward with delisting their securities. At that point, Pluri might be able to appeal the decision to a NASDAQ hearings panel. This process can pause any delisting actions while they wait for the panel's decision, and the panel could even grant more time. The company is aware of the situation and says they are looking at different ways to get back into compliance. They intend to take the necessary steps, but they also put in a classic cautionary note. This basically means Therese no guarantee they'll succeed in meeting the requirements or that they'll be able to keep meeting them even if they do. It's a real tightrope walk they're on. Now, like many of these reports, this one is filled with what we call forward-looking statements. These are basically statements about the future, and the company is legally required to tell you that these predictions might not come true. They use words like may, will, expect, and anticipate to signal these future-oriented thoughts. The big takeaway here is that while management has expectations, many things can go wrong. These risks and uncertainties include their ability to actually meet NASDAQ's rules, changes in their stock's market value, and the overall economic climate. They remind us that past performance is not a predictor of future results, and they don't plan to update these statements unless the law requires them to. For more detailed risks, they point to their other filings with the SEC. And finally, to wrap things up on the official side, the report is signed by Liat Zoltz, the Chief Financial Officer of Pluri Inc. The signature essentially confirms that the information in the report is accurate to the best of her knowledge. So, what does this all mean for Pluri? Well, the company is in a precarious position with its NASDAQ listings. The immediate impact is minimal, giving them a window to act. However, the fact that they've fallen below the MVL's requirement and aren't meeting alternative standards suggests underlying financial or market challenges. Their ability to regain compliance hinges on increasing their market value, which often means improving business fundamentals, boosting investor confidence, or perhaps some creative financial maneuvers. The cautionary note is serious and indicates a genuine struggle. Investors should be wary as delisting could significantly impact liquidity and investor access. It is a high stakes game for Pluri to prove its worth to NASDAQ and the market in the coming months. The question is, can they turn things around quickly enough? Alright, that is our breakdown of Pluri Inc's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.